Hello, good day. Today is the 16th of February 2009. We are presenting here again this week the Forexserve weekly Forex, Treasury and commodities update. This week we expect it to be very much like last week, with a risk aversion again high on the agenda. We have seen last week that the US Fed, the government has tried its utmost to reassure the markets by way of stimuluses and taking away the fear of there being further bad debts in the banks. But the best efforts, while it might work in the long term, in the short run people are not really convinced. Even the G7 communique was taken with a pinch of salt, and we've seen that the currencies have been sold off and the dollar has been bought. And I think this week too we will see a risk aversion at a heightened state. This would be with the exception of the yen, of course, which in times of stress has been bought and sought after by the markets. So very much a continuation from last week, where we had said that the pound would possibly fail at 149, which it did, and now it is hovering somewhere close to 142, and the euro is trying to break below the 47 support. So by and large, dollar strength is predicated in this week. Gold in that scheme of things could also peak, whereas the oil prices did shoot up on Friday by almost 10% from the bottom of 35. So it could be somewhere above $35 to $38 for the rest of the week, with no appreciable change seen in the demand coming up, because I think 5% of the global production has been cut, which is something like 4 million barrels per day, and even with that the prices seem to be at the lower end of the trough. The interest rates are a different story, where we find that some pressure on the US Treasuries, which is pushing the yield curve up, and of course the shorter end is pegged to the Fed rate and the central bank rates of the world. So the yield curves of especially the US could stiffen a bit, because there is some concern about the value that people are getting from these investments. But with the dollar strong, I think there could be some fresh interest in these treasuries, because they are the instruments of last resort for the markets. With regard to India, we feel that the budget, the interim budget which was put forward today, was not as populist as people had thought it would be. So therefore, the markets are expecting some sops which didn't come. So there is some disappointment. But by and large, I think nothing really much could be done at this point of time, where the fiscal deficits are. We also find that the rupee has weakened since the morning, and I think there wouldn't be a break of the range of 48.50 and 49.50. Thank you very much.
Hi, this is the Forexserve weekly chart analysis, and this week we have shown the chart of gold to start with, and we see here which is known as a fractal top formation, and we've seen here on high volume a candle which looks like a hanging man. Of course we need a lower close today for confirmation. So overall we feel that gold might peak, as it would also because the risk aversion is at a high. So we expect gold to peak somewhere close to the 940, 950 level. We then look at oil, light crude, which is indicating that There has been a bottom on Friday, and of course their volume hasn't been very high, so it could be somewhat suspect. There could be a move close to 42 or so, and then maybe a drop, so it's likely to continue at the lower end of the trough. We look now at the majors, and what better way to start than with the euro. We see here that the euro has opened with a gap this morning, and this Bollinger Band had narrowed, indicating there could be a sharp move coming up soon. So if it were to break below the support here at 127.20, we expect it to head all the way down to 120, 122 pocket, which we have been suggesting for a while now. So weakness is predicated here. And we look at the GBP, which we had referred to last week, where we had suggested that it should fail somewhere close to the 149.50 region. A, because there was this trend line passing here, B, because it was highly overbought, and it would possibly fail at the 3 months exponential moving average, and that's what we've seen. If it were to close below the middle point of the Bollinger Band, as we see here, we would expect it to head towards the lower Bollinger target of 137. And that's all for this week. Thank you very much. Until next week, goodbye.